So welcome everyone to the November meeting of the Learn, Grow, Invest Club. We are back. We've been out for 2 months. We've missed 2 meetings, and we are happy to be back today for our November meeting. So welcome, and we really hope that you're able to stay with us for the full duration. We have an excellent presenter and presentation here for you today. So we are, get your pens and paper, get everything ready, and be ready to learn today. We're doing some learning, we're doing some growing so that we can do wise investing. All right, so we're just gonna, as is customary, open with a word of prayer. Let us pray. So Father, we give you thanks for this time, Lord God. We give you thanks for this opportunity and this platform to just be able to learn more and to grow with each other, to grow this community, Lord God, and to understand more about investing, to understand more about how to be better stewards of what you have blessed us with. We give you thanks, Lord, for this time. May it be a good time of discussion and learning and growth. In Jesus' name we pray. Amen. So for those who are new here, I am Renee McDonald. I am the co-founder of Learn, Grow, Invest Club, along with my husband, Jermaine McDonald, who is not in the shop today. So just a little bit about our club. We were founded in 2017. It is a non-profit, a not-for-profit club. We are here to simply build a community, a strong community of complete investors. We're not about just money. We want to ensure that our members know, understand, learn more about what solid investing looks like, what it is, what it means, and as a part of that, as a part of being a complete investor, also be willing to give back to the community, to give back to those around us. So we welcome you to join us. We have several platforms that you can participate on. In the description of this video, right below here, we have the links to those different platforms, one of which is our Facebook group. So we are aiming to build that community. We are encouraging you now. We're encouraging you today to share this video with others who you think would benefit from investing information, who would like to learn more, who would like to grow as investors. Share the video, be active in the chat. We are quite a community with a lot to say and a lot to share. So we invite you to take part in the conversation. Join us on Instagram, join us on Twitter. We are active and ready to go, ready to have solid conversations with you. If you have investment questions, drop them in the Facebook group and the community will help to answer the questions that you have there. So with no further ado, let us welcome our guest speaker for today, Mr. Andre Thompson. Andre is a GK Capital research analyst. He joined GK in October 2017 and provided assistance to both the upstream operations team and the consumer lending team before transitioning to the research and trading. He's now responsible for providing in-depth analysis and official recommendations on different companies trading on the Jamaica Stock Market. As a licensed equity trader, his role also entails day trading on both the main and junior markets of the JSE. So Andre also holds a Bachelor of Science in Economics and a Master's of Business Management, both from the UWI. So just a reminder, we are here to help you learn and grow. You are still, it is still recommended that you find and depend on your licensed financial advisor before you go into any investment relationships. So with that being said, welcome, Andre, and over to you.
All right, great. Thank you. Good evening, everyone. Good evening, learn, grow, and invest. It's my pleasure to be discussing with you trading strategies for the stock market, as well as the necessary tools and resources needed to aid in proper trading and investment decisions. I've done some research on the Learn, Grow, and Invest Club, and I love what you guys do. I think it's a great initiative, and I'm happy to be a part. I'm happy to present tonight. I'm happy to contribute to the overall improving learning the investment landscape locally. So yes, I'm a equity trader and research analyst at GK Capital, which is a subsidiary of the Grace Kennedy Group of companies. So basically, my job description entails preparing research papers on the JSE listed companies, as well as bond analyses, as well as investment for overseas companies, and they're about I do the trading, stock brokerage, and I also assist with portfolio management with respect to funds that are managed by GK Capital. So basically, when I do reports, we provide reports to the clients or the funds that we manage, and then we give a buy, sell, or hold recommendation in terms of equity positions for their consideration. All right, so given that this is a group of sophisticated investors, much of what I will be discussing will probably be known to you guys already, but nonetheless, I hope to provide some valuable insight to investing, as well as day trading and short-term investing, a particular focus on day trading and short-term investing. But I plan to cover the whole landscape, short-term as well as long-term investing. All right, so in times like these, where there are so much uncertainties associated with the COVID-19 pandemic, it's important that your trading and investing be guided accordingly. You want to ensure that the proper strategies, tools, and resources are employed in order to protect your portfolio and maximize returns. You don't want to just be trading blindly and you're not sure what you're doing. You don't want to be trading aimlessly or investing aimlessly. You will lose money if you don't know what you're doing. And trust me, it's not a good feeling to go to bed at night, losing money from investing. That kind of thing keeps you up at night. So there are different trading strategies that suit different investors and traders according to their respective appetite for risks. Some investors will probably be more inclined to take on risk. Some try to preserve as much capital as possible, and they prefer to have as minimum exposure to risk as possible. So this leads me to my first tip. You want to know your risk profile. What is your purpose for investing? Once you've answered this question, you will be able to know exactly what type of investor you are or what type of investing is best suited for you. So locally, most investors tend to engage in two types of investing. So you have your active traders or your day traders. So basically, these traders try to profit from short-term price movements or swings by studying market trends. Technically, the period over which traders trade, it's relative, but as the term day trading suggests, you have a lot of traders that try to enter and exit positions, within a 24-hour time span or within when the market is open. This is for the riskier investor. So likewise, now you have the passive investor, who is more of a long-term investor. These investors tend to buy and hold stocks for the long term. They, in addition to analyzing market trends, they tend to do more in-depth research. They try to do research on the companies that they're investing in. And these are, less risky investors. So now, whether you're an active trader or a long-term investor, any trading strategy that you decide to utilize, I strongly believe that it should be influenced by proper research done mainly in the form of fundamental and technical analysis. In my opinion, as a matter of fact, it should be done in that order. Fundamental analysis, which then leads you to valuing a company's stock and determining the intrinsic value of the company or what the company is actually worth. and then you conduct your technical analysis for the stocks chosen. So I say this because you don't want to just basically, you know, buying shares in a company solely to profit. You want to have the mentality that you're owning the company that you're investing in. And, you know, we all would want to own companies that are being properly run, and, you know, companies that are good. Basically, you want to trade stocks for companies that you wouldn't mind owning, even if there was no market for us to actively trade those shares. So essentially, I know that day trading is normally, you trade the stocks over a short period of time, but especially locally on the Jamaica stock market, there will be instances where, you know, you're unable to sell a stock because, you know, it's probably, it's being sold for less than what you bought it for. So that's why I strongly recommend in an instance like that, when you're stuck with a stock, you want to be stuck with a good stock, a stock that you can hold until it grows into what it's actually worth. And then you can sell and realize a profit. And then that's, you know, that overall contributes to wealth accumulation, which everybody wants. You know, we want to have financial freedom. And, you know, as we all know, trading stocks is one of the most straight paths to achieving, you know, wealth accumulation and financial freedom. So, all right, let's look at fundamental analysis a bit. I don't want to stay on this too long, but as I said, I think it's fundamental analysis is a necessary, like an initial stage before you conduct day trading. So fundamental analysis is basically deriving the fair price of a stock by examining related economic and financial factors in order to see if the company's stock is undervalued or overvalued. So the factors that you want to consider when conducting fundamental analysis, the things that you want to look out for is you want to assess the company's historical financial performance. So basically, you want to look at things like the company's revenue over a certain period of time. So let's say, for example, a 5-year period of time. How has the company's revenues been trending? Has it been an upward trend? Are revenues growing over that 5-year period of time? That would signal that the company is doing well. You also probably want to assess things like the growth rate at which revenue is growing. Year over year, is it growing faster? Is it growing at a faster rate? Or is over the period of time that you're analyzing, is revenue slowing? These things you want to consider when before you buy a company's stock. You want to look at the net profit. You want to look at the trend in net profit. Same thing. You want to ensure that net profits are growing over a period of time. So basically, you want to ensure that a company is being efficient, it's properly managing its expenses, and you want to know the amount of revenues the company can retain in profits. The stronger the company's profits are, the more beneficial it is to you as a shareholder, because this will influence the stock price. The stock price is likely to grow. And also, not only will you benefit from an increase in the company's stock price, but when the companies are profitable, they normally tend to pay profits to shareholders in the form of dividend. And, you know, we all know that multiple streams of income is key to wealth accumulation. So not only do you benefit when you conduct fundamental analysis, not only do you benefit from income associated with capital gains when you're buying and sell stock, but you're getting additional income in the form of dividends. I mean, when you add those two, and, you know, for those of us who have day jobs, that's 3 sources of incomes. You have your dividend income, your capital gains income, and you have your earned income. One step closer, you're on the right path to financial freedom. So other factors that you want to consider when conducting fundamental analysis, you want to look at the company's market share. You want to ensure that is it poised to grow, poised to increase its market shares. You want to look at the company's product and service offerings. You know, it's always wise to invest in companies that, you know, you're actually a customer of. So, you know, globally, you know, we have the popular Apple stocks, but the Amazon stocks. And the fact of the matter is that we are actually consumers of the products and services offered by Appleton. By Apple and Amazon stock. You know, most of us do online shopping, and, you know, a lot of us have iPhones. So you want to analyze things like these. You want to ensure that the product and service offerings, it's creative, it's innovative, and it it allows the company to improve its brand and increase its brand retention. You want to analyze the industry conditions within which the company operates. So you want to look at factors such as, your barriers to entry and exit, the size of the industry, the performance of the industry, the number of competitors in the industry. These are the things that you probably want to, at least have an understanding of. You want to look at the overall macroeconomic conditions within which the company operates. So things that you want to consider is the political landscape, the environmental landscape. For example, if for those of us that follow the S&P 500 index, which is basically an index that tracks the American stock market, we see that it has basically been topsy-turvy leading up to the 2020 elections. So these are how things like that affect stock trading. So you want to consider your political landscape, the economic landscape, social landscape, because I mean, even when there were a lot of protests surrounding, the unfortunate demise of George Floyd, things like these actually move the market. So you want to stay ahead of things like these. You want to look at your technological landscape, the legal landscape, the environmental landscape. You want to look at the company's management team when conducting fundamental analysis. You want to ensure that the company is being run by a competent and a qualified and an experienced management team. You have to treat it like it's a company that you own directly, and you would want qualified individuals to be running that company that you own. So you want to pay attention to things like that. So normally, when there are changes in a company's management team, these companies are required to post these things to the stock exchange, their local stock exchange, because these are information that investors feed off of that aid them in their investment decisions. And lastly, in addition to the historic financial performance, you want to look at the overall financial position of the company. You want to check out its assets versus its liabilities. So basically, you want to look at the company's debt. You want to ensure that it's not too indebted, because when a company has a lot of debt on their balance sheet, it attracts high finance costs, and things like that erode your company's profitability and will result in a downward trend in profits. You don't want that. You want an upward trend in profits. You want your company to be solvent. You want your company to be a going concern. And you also want to look at your company's cash flows. You want to ensure that your company is generating cash. You want to ensure that your company's short-term assets can cover its liabilities, thus allowing it to be liquid. So the company is able to be solvent, liquid, and a going concern. These are things that investors look out for. So now once you've done the research, a useful tool would be to forecast where you see the company and its stock price heading. So as I said, we look at the company's historic performance. So for example, you can ascertain what the 5-year annual growth rate in revenue was. You can use that information to forecast what it will be for the next year or for maybe the next 5-year period. So let's say, for example, a company is growing revenues at an average of 10% per annum. You can apply a 10% growth rate to the most recent financials. So for example, 2019 financials, you apply a 10% growth rate, and then you can forecast where you see revenues heading for the next financial year. As such, you can do the same with your profits. You look at the average of your key financial ratios, and you can forecast the company's position a year from now. So you probably want to look at your annual gross profit margin, your annual net profit margin, and then you find out what earnings are likely to be over a specific time period. So this allows us to value a company's share price when we employ valuation techniques such as relative valuation. So now relative valuation basically mainly speaks about your price to earning ratios and your price to book ratio. So basically it's a comparison of a price to the earnings that your company delivers to investors. And then you have other valuation techniques such as your dividend discount model and your discounted cash flow method of valuation, etc., your sum of the parts method of valuation, etc. I think it's important to basically when you want to value a company, you probably want to employ more than one valuation techniques, and then you probably find like an average price that can guide you in terms of what the intrinsic value of a company's stock is, or what the fair price of a company's stock. Because at the end of the day, we don't like to be scammed or bamboozled. You don't like to overpay. You don't want to overpay for something. If a broom actually costs $100, you don't want somebody to trick you into paying $500 for it, especially if you're very far from financial freedom. So that's why you have to do the necessary research and analysis so that you're not, put in a position like that. So locally, relative valuation, such as PE multiples, is arguably the most popular method of valuation, where a stock's PE is compared to, let's say, the average of the market within which it trades. So you probably compare, let's say I want to buy NCB shares. My research suggests that the company's NCB's PE is currently 13 times. So remember, your PE ratio is equal to your price divided by your earnings per share. So let's say NCB's PE ratio is 13 times, and the JSE main market has a PE that averages about 20%. Right then and there, that suggests that NCB is undervalued because it is trading at a PE that is a discount to the overall stock exchange market. You can go further in depth now. You can probably compare NCB's PE to that of the industry within which it operates. So you can compare it to the PE of the financial sector, the finance industry. So let's say the PE averages, the finance sector PE averages about 80 times. NCB trades at 13 times. The potential for growth in terms of NCB's stock price, based after you've done your PE calculation, suggests that it can grow from a 13 times PE to 18 times PE. So that's how we analyze the whole PE, and similarly the price to book ratio. The reverse is true for if NCB's PE is a premium to any average, the JSE main market average, or the average to that of key competitors. If NCB is trading at a PE of 25 times and the market is trading at a PE of 19 times, what this is telling me as an investor is that NCB stock is overpriced. So the PE kind of works like a price tag. It lets you know if something is overpriced or underpriced or fairly priced. So basically, once you've determined what a company's stock is worth, a key principle for trading is to always buy low and sell high. If the stock price is undervalued and your research suggests that it's trading at a discount to its fair value, one should buy. If the stock is trading at a premium to what your research tells you the stock is worth, one should sell. It's just like the business of buying houses, buying and selling houses, or buying and selling cars. If a properly functioning car is being offered at a bargain price, you want to buy the car, and then you sell the car for what it's actually worth, and then you realize a profit. So now it's risky to engage in short-term buying and selling of cars if you know the car has an underlying problem. If the car, it has engine problems or things like that. You don't want to buy a crappy car or a car that's not good just because it's a popular car. You want to buy for what it's actually worth, because when the time comes to sell it, you don't want to be stuck with it. You get me? So basically, these are the fundamentals that you want to consider when engaging in fundamental analysis. So now let's look at technical analysis, which is it mostly proves useful for a day trader. So as a disclaimer, technical analysis can be tricky, and at times it's not reliable. So again, that's why I say the fundamental analysis, and then you look at your PE analysis, your technical analysis. Yes, thanks, Demetrius. Yeah, the PE is basically the mathematical formula for PE is the price you can find out on the stock exchange website divided by the earnings per share. Basically, I'm going to show you guys how you can pull all of that information once I get to touch on the tools and the resources segment of the presentation. And then you probably get some, for those who are not familiar with like valuation techniques such as PE. So yes, where technical analysis is concerned, it requires in-depth research and practical application in order to gain a proper understanding of it. I want to stress the practical application aspect of it. Practice makes perfect. As a disclaimer, where day trading is concerned, day trading is not very prevalent on the Jamaica stock market due to the illiquid nature of our market and the lack of volatility, you know, compared to your New York Stock Exchange or thereabout. So when I say illiquid, in the US, you have trades being conducted, you know, at 1 second intervals. Trades are occurring like this, rapid, because there's so much buyers and sellers. You know, when you look at the US economy, I mean, if you want to get us, everybody know the US, Jamaica's economy pales in comparison to the US economy. So they have a much more vibrant stock market. So that's why locally we don't have as much day trading opportunities as does the US. Because of the size of, they have so much buyers and sellers, so much investors, their market is more volatile to news. Any kind of news, the market reacts. So as I said, markets would have been reacting to the ongoing presidential election. Some investors are nervous. They're afraid of, you know, for example, Joe Biden's tax plan to increase taxes for the more wealthier bracket of individuals. So they probably want to, you know, sell the stocks and, you know, keep their assets safe. Then you have some investors who are optimistic, you know, of a likely Biden victory. They believe it will be better for the markets. Biden will bring more stability. So things like that fuel investment decisions. So in addition to a lack of liquidity and a lack of volatility, given the lack of liquidity and volatility, you want to consider entering your orders beforehand. You don't want to sit down and wait until, you know, when you're looking in the queue, you see you know, you see a buy order or a sell order. Sometimes you have to be ahead of the market. You want to enter your prices or enter your orders beforehand or in advance of having them filled. Because for those of us who want to, you know, conduct more day trading, you want to bear in mind that sometimes it might take days or weeks before the order is filled. There will be times when you'll be able to, you know, buy a stock and sell a stock in the same day, but the probability of that is not as high as we would want it to be, or as high compared to the US market. Another thing I wanted to carefully note where day trading is concerned is that you want to ensure that your profits cover the fees associated with both the buy and sell ends of the trades. So locally, commission rates average about 1% of a dollar spent on shares. CES fees are 0.3% of the dollar spent. And then your JCSD fee is 0.03% of the dollar spent. And then GCT, tax paid to the government, is 15% of all the fees. So it's 15% of your brokerage fee, your CES fee, and your JCSD fee. So that probably equals to about, if you round up, about 1.5% of the trades dollar spent on one side. So remember, this is one side. When you buy and you sell, that attracts two fees of 1.5%. So in aggregate, you're attracting overall fees of 3% on both sides. So therefore, when you day trade, you want to ensure that you've entered and exited a position that you've generated at least 5% profit, which would net around 2% fees after fees have been deducted. You don't want to day trade and then, you know, you exit with a 2% profit, but after fees have been deducted, you're down 1%. So a 5% profit is a reasonable, you know, reasonable assumption to work with. Another thing with day trading is that our market, as I said, it cannot really facilitate day trading because of the fees, as opposed to the New York Stock Exchange, given the advent of 0% commission day trading. So we are yet to really realize 0% commission day trading, as you know, brokers like to get, they want to make a fee off of stock transactions that we conduct. Had there not been any fees, I'm sure that, you know, day trading opportunities would present themselves, because, you know, we wouldn't have to pay 3%. Total fees that we'd probably pay would be far below 0.5% on either side. So you want to consider these things when doing day trading. Also, you want to start relatively small. When it comes to day trading, technically, it's not about the size of your transactions, but it's the frequency and the number of your transactions. So you want to start small, as small volumes are easier to move than large volumes. Smaller volumes should be traded with smaller market cap stocks, and larger volumes should be traded with larger market cap stocks with the higher volumes traded, higher units traded per day. Point of information, when I say market cap, for those who don't know, market cap is basically the market value of the entire shares outstanding. So it's basically the market value of the entire business. So for example, when you are watching Bloomberg or CNN or the business news and you hear that Apple is the first $1 trillion value company, essentially what that means is that Apple has a market cap of $1 trillion. So that's just a point of information. All right, so now technical analysis. What technical analysis does is that it assesses historical data comprising of mainly price and volume, and you assess that in order to predict future price movement. So, for example, one might observe that a stock always trades higher and it trades more often towards the end of the trading day. So what this might influence a trader to do is to buy a stock when the market just opens. Our market pre-open is 9 o'clock and then the market officially opens at 9:30 a.m. So this might influence a trader to say, hey, let me buy this stock when market opens at a price that's closer to the open price, which is the first price a stock trades at. And then you try to profit by selling that stock closer towards the end of the day when you notice the stock trades at a higher price and there are more volumes being moved. So this is an example of day trading. As I said, day trading requires a lot of time, a lot of attention. You want to be focused. You have to look at the queue. We'll have a look at what the queue looks like when I speak about the tools and resources. So basically, essentially what technical analysis does is that it attempts to signal the best entry and exit point that will provide the best returns and maximize your profits. All right, so now factors that we want to consider when doing technical analysis. I'm just going to list them and probably speak about them briefly, but I plan to show you further down into the discussion. Factors you want to consider are things like your 52-week high, your 52-week low. As the name suggests, there are 52 weeks in a year. So you want to, the 52-week high basically tells us the highest price that a stock has traded over a 1-year period. Likewise, the same for a 52-week low. Lower price, the lowest price that the stock has traded over a 52-week period. What the 52-week high and low tells us is that, a 52-week high should be treated as, this is probably one of the best possible prices to sell. And your 52-week low is that this is probably one of your best possible prices to buy. Once again, this is after you have conducted fundamental analysis and in the back of your mind, you know what the intrinsic value of the stock is. This is what will guide your investment decisions. As I said, our market is very liquid. So some stocks are more liquid than some. You want to assess the queue and find what stocks are liquid, what stocks are not liquid. This will guide you into determining what stocks to conduct your day trades with. You want to consider your support and your resistance levels. So for those who don't know, your support level is basically the support level occurs when a downward trend is expected to pause due to a concentration of demand. So basically at support level, at this price, more investors find buying a company's stock to be attractive. Resistance is the level, or a resistance level occurs when an upward trend or an increasing trend in a stock is expected to pause temporarily due to our concentration of supply at this price. At this price, most investors find selling to be attractive. So basically, I will show you on the chart, but on the chart, price is the level that a stock price just can't seem to buy. So what this does, what the support and resistance tells us is that resistance, the level the stock price can't seem to surpass, this suggests that this is probably one of the best prices to sell. And then the resistance level, which is basically that price that the stock doesn't seem to go further below from, what this tells us is that this is probably a decent price to buy the company's stock. Other factors you want to consider is to look at your charts and your candlestick patterns. So you have candlestick patterns available on the JSC website. What the candlestick pattern does is that it is used to determine possible price movements based on past highs, lows, open, and close prices. What the candlestick charts also does is that it gives us the overall sentiment of the market. It shows where the emotions of the market is. Another thing that candlesticks tells us is that, you know, when you look at things, for example, on a candlestick chart, if you observe higher highs, meaning the stock is just trading higher and higher in terms of the maximum price reached, this probably gives signal to a bullish trend. So what a bullish trend means is that a stock's price is poised to continue moving upwards. The reverse is same for a bearish trend. When you're observing lower lows, this gives signal that, you know, there's an imminent bearing trend. So this suggests that the stock price is likely to go down and decline. These are things you want to consider when conducting technical analysis. Efficient tools for day trading also include your stop loss and your take profit features, which are basically like automatic buy or sell orders. So you take your profit, that's an automatic sell order at a predetermined price. You enter that price. Once the stock hits that price, it's automatically sold, and the reverse is same for your stop loss. However, unfortunately, these features are unavailable for our local markets. You know, it's available on like, you know, the New York Stock Exchange, but it's not available on the Jamaica Stock Exchange. So in fact, this is also another hindrance to day trading, because I mean, these are effective tools that allows one to conduct efficient day trading. Also, our market doesn't have the feature of shorting stock, which is basically you're betting against a company's stock. You're betting that the company's price will go down. Currently, we don't have that feature. I know that the JC is looking into implementing it, but as it stands, we don't have that feature. And again, that's another hindrance to day trading. You want to look at your price trends. You can probably look at your price trend over like a 3-month period, a 6-month period, a year-to-date period, or a 1-year period, with shorter periods being ideal for your short-term investors and your longer periods for your long-term investors. You want to look at your daily highs and your lows, so not just your 52-week high and lows. You want to look at your daily high and lows. You want to look at the average daily units traded. So basically, volumes or units traded is a measure of how many times a stock is bought and sold in a given period of time. So what this can signal to us is that, you know, in an instance where there is high volumes being traded, what this can suggest to us as the investor is that, okay, this stock is garnering a lot of interest. If you do your research and you're not really sure why all eyes are on this stock for it to be trading so much, what this can probably signal to us is that positive or negative news is imminent. Positive or negative news is pending. So this would signal to us that, okay, we need to do additional research so we can be properly positioned to benefit from whatever news is yet to unfold. A very important factor to consider as well is news regarding the company's stock. You want to look out for earnings. When the company posts its earnings, you want to look out for you know, news releases, your mergers and your acquisitions, expansion efforts, corporate actions, changes to the company's management team, dividend announcements. I'll show further down, I'll show you, the impact of the aforementioned on the company's stock price. But, you know, an example of news release, you know, this is basically over a longer trend, but, you know, when NCB announced its intentions to increase its stake in Guardian Holdings, the price ballooned from, at the time, I think it was about around $140 per share, and the stock price ballooned to a high of $250 before normalizing or settling at around $200 per share. And as you know, that was before the COVID-19 pandemic. So in instances like that, you want to be properly positioned to benefit from things like that. And as a day trader, you want to look out for these things. Another important tool, if not the most important tool when conducting short-term trading, is your indicators. So what the indicators does is that it signals to you buying opportunities and selling opportunities. So two of the most applicable indicators to our local market are your simple and exponential moving averages. first set of indicators that I want to speak about. These are useful where they mitigate the impact of a random short-term fluctuation in stock prices over a specified time frame. And what it does, it gives a proper reflection of the true trend of a company's stock. Because at times, a company's price might, fluctuate and increase sharply, decrease sharply. As I said, that's influenced by a lack of liquidity in our market. But for example, one day, let's look at NCB, for example. Subsequent to the news of the acquisition of Guardian, let's say NCB skyrocketed to 150 the following day. You have an investor that has been looking to offload NCB shares. He has a sizable amount of shares. So in order to move those volumes, he has to lower his price. So he will probably sell NCB down to 140. That can throw an investor off. So what the simple and exponential moving average does is that it smooths out the trend and basically mitigates for instances like these to give a proper reflection of the trend in stock price. The difference between the exponential moving average and the simple moving average is that the exponential moving average tends to give signal to a bullish trend or an imminent increase in stock price much quicker than a simple moving average. Basically, what this does, it's a mathematical formula that you have to apply, and what the formula does is that it applies a higher weighting to the most recent price. We'll look at all of this more in depth further along the line, but in essence, short-term moving averages are ideal for your short-term investors. So you have your 10-day moving average or your 20-day moving average. And then you have your 50-day moving average or your 200-day moving average, which is ideal for your longer-term investor. Another indicator is your MACD, which is abbreviated for your moving average convergence divergence. So what the MACD is it's a trend following momentum indicator that shows the relationship between two moving averages over two moving averages of a security's price. The MACD is calculated by subtracting the 26-day exponential moving average from the 12-day exponential moving average. What this indicator does now is that it triggers technical signals when it crosses above the signal line. And then when it crosses above the signal line, this suggests that this is the time to buy the stock. When it goes below the signal line, this suggests that it's a time to sell the stock. What is the signal line? The signal line is calculated by finding the 9-day exponential moving average of the MACD, and then basically you put this on a graph and you're able to conduct your technical analysis and identify the best times to buy, the best times to sell. However, when the MACD moves above the signal line, you want to basically pay attention that it crosses completely, because you don't want it to show that it's crossing the signal line only to dip, because then you will have bought and then the stock price has fallen, and then you're currently experiencing unrealized losses. So you tend to want to sit back and observe and wait for the cross to fully form or be clear, and then you enter at that point in time. What the MACD also does is that it helps investors to understand whether a bearish trend or a bullish trend is strengthening or weakening. So the distance between the MACD line and the signal line indicates the strength of the trend. The greater the distance the MACD line is above the signal line, this shows that the bullish trend is increasing. Or what this shows is that the stock price is poised to continue increasing. And the reverse is saying that the MACD is below the signal line by a great distance. It shows that the further decrease in the stock line is likely. All right, so basically, once these variables and tools have been assessed and analyzed, you can profit by trying these techniques that I find to be most applicable to our market. You want to trade the news. As I mentioned earlier, you want to listen out for news regarding the company's stock. You buy when good news is announced, and you sell when there's bad news. Remember, can I reiterate it anymore? You want to be guided by the fundamental analysis and the intrinsic value of the stock that's in the back of your mind. I always use that. You want to be guided accordingly. So the key to trading the news now is that you want to be the early bird. The early bird catches the worm. So my advice would be to subscribe to the business news, and you just try to stay afloat, try to stay informed. Have push notifications for things like your Gleaner business news, your Observer business news, your Loop business news. If you're day trading on the overseas market, you probably want to turn on notifications for your Washington Post, your Bloomberg app, your Yahoo Finance, things like that. This allows us to stay on top of the market. So once good news is announced, what you can do is that you buy the stock, especially if it's trading, if it's considered to be undervalued, you buy the stock, and then you just sit back, you wait for the price to grow, and then you sell once you're at a profit, once you've covered all your fees. All right, so I want to touch on the impact of following the news. So I want to share my screen briefly. All right, so I hope you guys can see my screen. All right, great. So your stock exchange, this is key tool. I like to keep my tools and resources, my bookmarks. So these are the things that I like to use. But let's look at the impact of news on a company's stock price. So for example, CEPROD. So this is the market code sheet that shows the stock price. These are the stock prices closed today. We'll navigate the Jamaica Stock Exchange website a bit in detail later on, but I want to give you an example of CEPROD. Okay. Here's CEPROD. Many of us are consumers of CEPROD products. We use our chiffon margarine, we use Surge milk, things like that, Golden Grove sugar, things like that. So what happened recently was that CEPROD posted earnings for the 9-month period ended September 2019. So let's look at what they posted. We're doing a bit of fundamental analysis right now. So for the 3 months ended September 30, what do we have here? Net profit from continuing operations ballooned. Last year it was 284 million and it grew to 1.3 billion. That is growth in excess of $1 billion. So things like that, you want to stay ahead of the market. So in an instance like that, let's look at when. So this was posted on the 21st of October 2020. Let's look at CEPROD stock performance on that day. As a matter of fact, let's look at the time to pay. See, this was posted at 8:40 a.m. That's before the market opens at 9:30 a.m. Let's look at how that affected CEPROD stock price. What do we have here? I said October 20, right? So what do we have here? The price closed at 58 on this day. When earnings was released, the stock price skyrocketed from 58.24 to 64.25. So this is an example of day trading. You want to trade the news. So let's look at the high even on that day. The high on that day was $70. Imagine owning a stock that you bought for $58 and you sold it for $70 per share. That's massive profits to be realized over a short period of time, such as within a day's period. Another trend that I want to speak to us about is another strategy, a day trading strategy that I want to discuss is basically following the trend. So basically, you buy when the price is going up and you sell when it is going down. This is based on the assumption that the trend will continue. And in instances like these, you want to use your support and your resistance diagrams, as well as your moving averages, as these are useful with the strategy. So let us look at, so if you want to look at CEPROD, since we're right here, basically you notice that this low of 51.17 is the lowest that it has been over a 3-month period. Let's look at CEPROD year to date. So this is the low for the year-to-date period. Mind that the stepward stock price would have been negatively impacted by the coronavirus. So that would account for the decrease in the stock price. We would have known this after conducting fundamental analysis. So this is a support level. So basically at this price, 33.37, investors found separate to be a buy. So you notice that it hasn't fallen further below that. At that price, that is a buy. As a matter of fact, it has increased. The support level increased to 37.35. Note for the remainder, it does not hit that low again. So safe to say at that point in time, right here was a support level, and right here was a support level. But if you didn't catch that, if you weren't an early bird, you're not rejoicing with profits. So now let's look at resistance. So remember, if you recall, resistance is the level that investors find selling a stock to be more favorable. So prior to earnings release that we looked at, where profits grew in excess of $1 billion, resistance seemed to have been around here. You know, the stock price didn't surpass 55. Resistance increased to 50 compared to 33, but then resistance has been around 54, and support hasn't moved from 50. However, as you near towards the trend, as you near towards when the earnings were posted, you find that the trend has broken. You have a new low, or you have a new resistance level. Your new resistance level is 64.25 now, and then your new support level is 57.99. So these are things that you want to consider when conducting your technical analysis. I want to show you guys, the impact of your moving average. So I'm just going to pull a spreadsheet that I use to track data like that. So it's a lot. It might seem like a lot. It's a lot of calculations. We're only discussing technical analysis briefly. I implore you guys to go home and probably do further reading on any other topics that I'm unable to speak about in depth. So I want to show you the impact of your moving average. Give me a little time. All right, so if you recall earlier, I said that, I'm not sure if I said it, but basically when you're analyzing your moving average, your exponential moving average, a buying opportunity is normally signaled when the shorter moving average goes above the longer moving average. So let's look at that on this diagram. This is the price versus the 20-day exponential moving average versus the 50-day exponential moving average. And this is for NCP stock. So I hope you guys can see clearly. But so the blue line is your stock price. Your orange line is your 20-day exponential moving average, or your shorter term exponential moving average. And the gray line is the longer exponential moving average. So what we see here is that, when we're looking at the price, there's a lot of fluctuation. See, there are sharp increases and sharp decreases, and the trend continues the same. So basically what the exponential moving average does is that it smooths out and gives a more accurate depiction of the trend. So we're looking at the gray line, which is the 50-day exponential moving average, and see, it basically follows the trend of the stock price, but it's more smooth. So basically when you have a dip here, an investor would be inclined not to sell at this dip, because the increase in the trend would continue. That's what the 50-day moving average does. And the 50-day moving average is more for the longer term investor. So for our day traders now, the 20-day exponential moving average is a bit more reactive than the 50-day exponential moving average. So remember, when the shorter term EMA, let's call it EMA, when the shorter EMA is above the longer EMA, an upward trend in price is expected. So you basically want to buy. So right here, we observe that, the shorter EMA was in line with the longer EMA. However, at this point right here, it started to break. So your buy entry would be right here, because that's what the signal is giving us. Going further, we see where the shorter EMA increases, and the distance between the 50-day EMA actually, it grows further. Likewise, when you look at the trend in the price increases. So now when we're following the 20-day EMA, we know that it's heading back to the longer EMA, the 50-day EMA. So at this point in time, when it meets it, an investor would be inclined to sell at that price as a bearish or a downward trend is expected. So what do we observe here? If we follow the blue line, a decline in price eventually occurred. So you want to buy when the shorter EMA right here is above the longer EMA, and when it meets with the EMA and further goes under, you want to sell at that price. So as I mentioned earlier, the exponential moving average, it signals the best buy and entry position on a company's stock. So these are the things that you look for in technical analysis. Also in technical analysis, you want to look at important dates. So, you know, when a company is nearing its year end, or when a company is nearing the end of a financial quarter, one might observe that, you know, the company's stock tends to trade higher. These are things day traders look for, and they position themselves way in advance before the end of the quarter actually approaches. So the end of the quarter is normally March, June, September, December. A day trader, you know, obviously this time horizon probably will be too short, but for a short, let's call them a short tenor or a short-term trader, they would be positioned to reap the benefits from, you know, the end of the quarter high from February. They would buy into a stock from February and anticipate selling that stock at a higher price at the end of the quarter, which is in March. These are the things you want to look for when you are day trading. All right. So we've gone through two strategies. We've looked at following the news and we've looked at following the trend. So now let's look at contrarian investing. I like to think of contrarian investing as the opposite of follow the trend. Contrarian investing, basically you buy when the price falls and you sell during the rise, assuming the trend will reverse. So a perfect example of this is, you know, IPOs. Everybody know about IPOs. It's the best way to flip your money, given that you're able to get what you applied for and, you know, etc., etc. So with IPOs, when a stock just starts trading, it rapidly hits a high and then it becomes overbought, only to later fall as the market corrects the price. But then sometimes it might become oversold before the market corrects the price again. And then that's when you find that the stock price basically kind of stabilizes. So the key to this strategy is to master the timing and to always be guided by the intrinsic value of the stock through fundamental analysis. So let's look at an example of this. A perfect example would be, you know, your Mailpack IPO. I think that was a lovely IPO. So we're looking for the Mailpack ticker. Ticker, you know, meaning the name that is displayed on the stock exchange. So we're looking at the trend. So as mentioned earlier, you know, your popular trends are your 1 month trend, your 3 month trend, your 6 month trend, your year-to-date trend, which is ideal for the day trader. Mailback only started trading this year, so longer tenor trends aren't available on the stock exchange. So let's look at the contrarian investing style. So right here, remember with contrarian, you want to buy when the price falls. So you have a sharp increase right here. So according to contrarian investing, you would sell once the price increases, assuming that the trend will reverse. So what we're seeing right here is that the trend in fact reverses. So the stock price declines. So remember, rule of thumb for contrarian investing, you buy when the stock falls. So you buy right here. What happens? The stock price rises again. When you reach right here, you sell again. And then you have another decline. You buy. But then, as I said, you know, sometimes technical indicators don't give a true reflection of the market. So you want to be guided by the intrinsic value. So right here, we observe that basically the price kind of stabilizes. However, you know, as we look here, we're at February 18. This would have been the onslaught of, you know, the COVID-19 pandemic. You know, early March was when we had our first case. So what you notice is that the stock price fell. We can call this right here support. Note it doesn't trade at 125 again. In fact, it increases. So basically, you would buy because it's at a low, it's at support, and then you buy until the stock finds resistance, and then you sell. So basically, that is the basics of contrarian investing. If you note, it's kind of different from following the trend. Okay, so Another trend that you want to observe is another strategy that you want to employ would be scalping. So with scalping, basically you try to profit from gaps between your bid and your ask spread. But again, remember that the trade must cover the attracted fees. So you therefore want to observe your illiquid buy-sell cues versus your liquid buy-sell cues. And you basically assess these based on supply and demand. You look at how many units are being offered for sale. You look at how many units are being bidded for sale. Bidded, how many units someone wants to purchase. So illiquid stocks, they do not present opportunities, as day trading is mostly suited for liquid stocks in theory. Liquid meaning the difference between the bid price and the ask price is small, with the bid price meaning the price that someone wants to buy a stock at, and the ask price being the price that someone wants to sell a stock at. But as I said earlier, it's a bit hard here because of the fees. So there won't be a lot of instances where you can benefit from day trading stocks with tight spreads. However, at times a trader is able to profit from wide spreads, as they tend to signal either a future or an immediate hike or drop in the stock price. Again, a trader would want to be positioned in advance of the forecasted hike or drop in that order in order to have your order filled. You however want to factor in the circuit breaker rule, which basically dictates that once a stock trades in any day, once a stock trades 15% greater or higher than the reference price, the stock is halted for an hour. So let's look at scalping more in detail. 1 second, guys. I want to show you guys, an example of a liquid and illiquid queue. So I'm pulling up the view markets. So I'm pulling up the view markets tab on the JTrader platform. So let's look at the example of an illiquid stock. So these are all the stocks traded. We're looking at the main market. These are the tickers for the stocks traded. There's the special Grace Kennedy. There's JBG. I'm looking for, I think Dolphin Cove is relatively illiquid. Dolphin Cove is, however, traded on the junior markets. I'll go here. These are junior market stocks. Dolphin Cove. So looking at this queue, if you look, you have small units being bidded for at 551, and then you have a decent block at 550. Someone wants to purchase 20,000 units of Dolphin Cove stock at $5.50. But what do we see below that? Nobody wants to buy at any price remotely close to 550. The next investor wants to only buy Dolphin Cove at 600, at 402 for 600 units. So basically, this is a perfect example of an illiquid queue. Basically, as I said, when compared to the US market, you have millions of investors purchasing the stock every second. As at close of our market, as at 1:30 p.m., there were only 8 buyers and 9 sellers. So this is an example of an illiquid queue. So basically, what this probably can tell an investor is that given that the queue is so illiquid, should somebody want to, in need of cash, something has come up, an investor wants to dump the Dolphin Cove shares, they have a bill they need to pay, they need to sell their Dolphin Cove shares at market, basically at whatever price they can get it sold at. If they were to sell around 32,000 shares, Dolphin Cove, the bid on Dolphin Cove would move, or the market value on Dolphin Cove, as the bid price is normally referred to as the market, it's the main depiction of the market price. If somebody dumps Dolphin Cove shares, 32,000 Dolphin Cove shares, what would happen is that it would go even below 402. So the price would fall significantly from 551 to way below 402. So as an investor, you're assessing this queue, you would probably look and say, okay, all right, fine. Let's say somebody wants to sell down to 352. You would end the order at 351. Or given that this is a large block, let's say the bid on Dolphin Cove was $7 and somebody wants to sell a large block. You would probably want to enter our order right above this order here at 550. So you would enter at 551, hoping that, you know, should somebody want to sell down to 550 because someone wants to buy a relatively large amount of units, 20,000 units, that's how you'll be poised to benefit. So this is the example of looking at, you know, liquid queues versus illiquid queues. Let's look at another relatively illiquid stock. All right, so let's look at general accident. So right here, the bid is 620, and then the price drops significantly to 602, and then you have some prices at 601, $6, and then you have a size block at 577. So should anticipating an imminent drop in general accident stock price, if I want to buy general accident at a low stock price, if I want to buy it at 577, remember the average, ideally this is the price region that you'd want to work with, you know. Investors wants to buy Dolphin Cove at 620, they want to buy a general accident at 620, and they want to sell at 650. When somebody sells down to 577, obviously someone has benefited from a bargain. You can be included if you enter a bid price or you enter order at 578, because mind you, the mentality of an investor who's looking to sell is that they want to move volumes. In order to move volumes, you have to lower your price. So if he wants to benefit from this 20,000 right here, you can enter a price of 578 and you will be able to benefit from it. Immediately, what happens right after is that once investors have been alerted that general accident stock price has fallen, what you normally see is that the bids come running in very quickly. So because it traded down to 577, somebody will enter a bid for 578. And then it's a whole tug of war to see who can be at the top of the queue, at the top of the bid, because it's a first come, first served basis. So the higher your bid price is, the more you're willing to pay for a company's stock. That's the priority that you're giving in the queue. So note 620 is the highest bid, you're at the top of the queue. So it's basically a tug of war to see who can have the highest bid. So normally you'll see instances where it's increasing by a cent, and you know, it continues up to, let's say, closer to the 650 bid right here. You as a day trader who purchased the stock at 577, you can just watch the bid go right back up to 620, and then you just sell it at 620, and just like that, you realize a profit. So that's basically an example of scalping. I want to call it improvising, given that our market is illiquid. Lastly, another strategy for technical analysis I want you to consider is arbitrage. So arbitrage is basically you're taking advantage of the difference in prices available for the same stock being offered on different exchanges. So because we have cross-listed stocks, that is, you know, stocks that are listed in GMD currency and USD currency, there sometimes exist unique opportunities in price disparities as a result of change in FX rates. So basically, this technique basically brings the currency variable into play, and as such, it provides day trading opportunities. So example of dual listed stocks are, you know, are proven stock exchange, proven shares. You can purchase or sell proven in either USD or GMD. So what happens is that you can actually take a bet on the exchange rate. If somebody wants to buy, you know, a large amount of proven shares on the US side, and, you know, after you've applied the applicable exchange rate, you realize that they're willing to pay a premium. What you can do, you buy it on the Jamaican side, and then you sell it on the US side, and then that way you benefit from the difference in price. As a matter of fact, for example, you know, the FX rate fell to 141 recently. Somebody wants to buy proven at, you know, an attractive price. When you do your calculations, if you assume that the exchange rate will go back to 145 or 150, what you, or even if the person wants to buy it at a higher price after factoring in an exchange rate of 141, if it is higher than what is on the Jamaican side, you buy on the Jamaican side and you sell on the US side, you can sit down and wait for the exchange rate to appreciate, and then you sell the stock and you realize a profit. That's a way to do it. So these are simple arbitrage opportunities that you want to employ. All right, so outside of strategies for technical analysis, let's look at, you know, some overall strategies for long-term and short-term trading. And I think some of these strategies are ideal for the current investment climate, given that, you know, global financial markets are depressed because of you know, the disruptions caused by the COVID-19 pandemic. One strategy one would probably want to employ is the average down. Once you've done the fundamental and technical analysis, trading stocks can just be tricky given all the uncertainty. Some companies tend to have bad quarters, which are likely to less be repeated. As a result, you may notice sell-offs. You know, I gave the example, you know, of a sell-off in General Accident or a sell-off in Dolphin Cove. One might observe sell-offs resulting in good stocks being oversold and vice versa. During times like these, you want to take advantage of bargains. So market crashes and corrections should be thought of as buying opportunities. A useful strategy is to average down on key stock position. So basically, averaging down is when a stock owner purchases additional shares of a previously purchased stock after the price has dropped, further resulting in a lower average cost at which the stock was purchased. So let's say you bought NCB, as I said, NCB acquired Guardian, the stock price rose to 250. You have faith and confidence in NCB over the long run, you know, assuming COVID disappears, everything settles. So you unfortunately bought NCB at 250. The stock of NCB right now is trading at around 135. You'd have basically lost some money. You know, that's not easy sleeping well at night. So what you can do, your average cost on NCB stock is $250 per share. What you do now, after having done your fundamental analysis and you believe that NCB is actually a $300 stock, you average down. You lower your average cost from 250. You buy it when it's at 135. And then basically you would find the average cost by conducting like a weighted average. You're finding the weighted average of the different volumes of NCB shares that you bought. And as such, you reduce the average cost. This is a key strategy that probably more long-term investors would want to consider. Yes, it's mostly for long-term investors because, you know, day traders tend to hold stocks for a short period of time. But when averaging down, you want to be mindful of the confines of proper asset allocation, as well as industry and geographic exposures, which lead us to another strategy, which is to diversify your portfolio. So portfolio diversification is basically reducing your exposure to any one particular asset or risk. So what this does is that it reduces risk by investing in a variety of assets, industries, or type of stocks. You don't want to put all your eggs in one basket because your portfolio will be less resistant to shocks. So you just want to diversify your portfolio. So for example, if the manufacturing industry is hardest hit by a second wave of COVID, the COVID pandemic, basically because you're exposed to other industries, you know, for example, or, you know, let's use a different example. Because tourism is the hardest hit by the COVID-19 pandemic, your exposure to, let's say, real estate would offset any losses, unrealized losses that you would be having as a result of your exposure to the tourism sector. So an example of diversification would be, you know, like 70% to your value stocks being your large established companies that are mature, and then you could probably have a 30% exposure to growth stocks. As mentioned earlier, Mailpack only listed this year, so Mailpack is basically a growth stock. So it's a young company, but it is poised to, the growth potential for it is very high. So you probably have like a 70% exposure to your established companies like your NCB, your Sagicor, your Panjam, which would probably be considered as our local value stocks or local blue chip stocks. And then you have 30% exposure to your growth stocks that, you know, this could be your Tropical Battery or this could be your Mailpack. Further diversification could be a maximum of 20% exposure to any one industry, as I mentioned earlier. So you could have 20% exposure to real estate, 20% to finance, 20% to manufacturing, 20% to retail, and 20% to tourism. So, you know, just like how tourism is basically slowed down because of COVID, your exposure to 4 other sectors in equal proportions or in favorable proportions would allow you to offset some of the losses that you're incurring as a result of your exposure to tourism. Lastly, now is the time for strong dividend stocks to be considered. All right, so companies pay cash to investors in the form of dividends. And when stock prices fall, but dividends are maintained or even increased, the end result is a higher dividend yield. You remember I mentioned earlier that, you know, dividend income is by having multiple streams of income, and, you know, by bringing dividend income on board, you're one step closer to financial freedom, or you're well on your path to financial freedom. What is your dividend yield? The mathematical formula for dividend yield would be your stock's dividend per share divided by the stock price that you bought it at. So dividend yield is basically a percentage. So local dividend yields have averaged about 1 to 2% per annum, or 1 to 2% per year. But because stock prices are depressed, there exists the opportunity to purchase stable stocks offering yields well above the historic average of the local market. So, for example, our local dividend kings are your Carreras or your SDL. You know, you would have probably observed Carreras prior to the pandemic. Sure, Dimitri, so I'll go over the financials. Prior to the pandemic, you probably noticed that Carreras was trading at $8 per share. That would have probably translated to a dividend yield of probably around 4%. Because Carreras is now trading at around $6.50, what happens is that the dividend yield has increased. And I've really done the maths, but let's say the dividend yield has moved from 4% to 6%. That's good. You're getting 6% of your money every year in cash. You can choose if you want it to go to your trading account or if you want it to go to your bank account. This is money that you get just like that. So this is in addition to any increase or decrease in stock price, in Carreras stock price. So if you bought Carreras at $6.50 and the price moves to $7.50, you get the capital gains should you sell. But in addition to that, if you still hold the stock, we refer to that as unrealized gain, or a gain that has not materialized because you haven't sold the stock. In addition to that, you're benefiting from dividend income. So these are things that you want to consider. So basically, guys, I find those to be the key strategies that one would want to employ when conducting both day trading and as well as long-term investing. I want to discuss now the tools and resources that are ideal for both active and passive investing, as well as for conducting both fundamental and technical analysis. So, as I said, I'll show you guys my bookmarks that I use. Basically, the main ones would be the JC website, your newspaper, your business news, the JTrader platform, which is the platform that you're going to execute the trades on. You want to be able to execute your trades from the comfort of your bedroom, your living room, or anywhere. You don't want to have to rely on the old-fashioned brick and mortar method of having to email your broker to sell the price, to sell your stock, or you have to call your broker. Those things are antiquated and outdated. We're living in the 21st century where it's more technologically advanced. So that's why the JTrader is a useful platform for conducting your trades and more efficient than just calling your broker and all of that. And then lastly, I'll show you guys how Microsoft Excel allowed me to be able to compare the stock price against the exponential moving averages of the stock. So let's navigate some of these resources now. So let's look at one of the most important ones. Okay, you guys can see the screen. So this is the Jamaica Stock Exchange website. The main tabs that I tend to employ will be your news tabs. Remember, if you want to follow the news, you look at this tab is your friend. It's your best friend. So right here, I can see that, okay, the Jamaica Public Service pref shares, this is the pref shares because JPS isn't listed, or at least not yet. This shows the financial performance for the quarter ended September 30. This shows Mayberry's performance, Kingston Properties. This shows that a connected party, key material updates. This shows that the Limners and Bars, the Limners and Bards has advised that a connected party sold 4.5 million shares of the lab. So you use these things to aid your investment decision. Salada, judgment of the company's application against Jacra, who wanted to increase, I think they wanted to dictate, how much coffee Salada Foods can buy from local farmers. And this keeps you abreast with news such as debt. Right here, Supreme Ventures successfully raised $3 billion in debt. So going forward, you can expect SVL, Supreme Ventures, to incur higher finance costs. So this is how you benefit from your news tab. I keep the daily market quote tab bookmarked. So I just click right here. I see the prices for the combined market. So I see the stock performance. So let's look at Barita. So Barita declined by 18 cents. It closed at 82.51. I can look at the volumes traded. The volumes traded was 52,000 units today. So this is how you want to navigate the JSE website as a key tool and resource for conducting your trades. Let's say Barita's intrigued me. I click right here, Barita Investments. I am able to look at the stock's performance over a 1-month trend, 3-month trend, 6-month trend, year to date, etc. Right here, I can look at latest news regarding Barita. So when I click here, latest news, I can say, okay, they appointed a senior manager, Miss Sarah Ying Hendrikens. Congratulations, Sarah. I look at that. If I know Sarah, to probably be the former head of Goldman Sachs or the former head of JP Morgan Chase or the Bank of America in a managerial capacity, I can say, okay, Barita is investing in their talent. They're bringing someone on board who is qualified and experienced. So things like these affect the company's stock price. So we look at the quarterly financials. So we see the financials for the third quarter ended June, financials for the second quarter ended March. Further down, we look at the audited financials, which basically shows the financials for the company's 1-year performance according to their financial year. And it has been audited by an external audited firm. For example, your KPMG, your PricewaterhouseCoopers, thereabout. And then I can look at the annual report, which basically gives us in-depth management discussion and analysis. It's normally a pretty lengthy document, but it provides insight into the company's operations, challenges faced, successes enjoyed, things like that. See, it's taking a bit of a while to load. It's normally a lengthy document. It has 195 pages, but you skim through. You normally want to pay attention to like your management discussion and analysis. If you scroll further down, you normally find it. General manager's report, which is basically the manager's discussion and analysis, things like that you want to look for. So basically, this is how you navigate the JSE website. If I want to pull historic information such as past prices or past dividends declared, I normally would go to market data. You go to your downloads, you go to your price history. I can search for the historical price for Barita from, let's say, 2016 to today. I press go. What it does, it shows me the historical price from the 11th of September from the 4th of November 2016 all the way down to today. You guys see how the site is. This is how tools can aid us in making our investment decisions. So I can download this in an Excel format. So it's been downloaded. I click right here. It gives me all the data I need to know. Your 52-week high, your 52-week low, your previous year dividends. It even gives you dividend information. So, and your close price. So let us highlight the key columns that we'll be working with. So an example, we discussed dividend yield earlier. So our practical application of how to calculate your dividend yield would be your previous year dividend. So we're looking at the dividend yield for the previous year divided by your close price. That right there is your dividend yield. Apply the percentage, your dividend yield is 1.6%. So basically, that's an example of what historical dividend yields have been averaging. Now is a time you're able to get exposure to stocks that are yielding dividend yields of 5% and thereabout. So now I can use basically the data pulled from the stock exchange to create my graphs now. So let's say I want to see the stock trend, although it's available on the website. This is how Excel now, which I listed as a key tool or resource, becomes useful. I can create a chart that tracks the company's stock price, the trend in the company's stock price. This is over a short period of time, and I can calculate my my MACD line or my 20-day moving average, my 200-day moving average, and find the trend in the company's stock price. To further, yeah, this is just an example in certain calculations that I do. I don't think I got to spoke in detail about your MACD. So this is an example of your MACD. So this is the close price versus the 10-day moving average and the 26-day moving average. This is your MACD now. So basically the blue line is your MACD line and your orange line is your signal line. Remember guys, rule of thumb that I mentioned earlier was that when your MACD is below your signal line, there's a downward trend in the stock price. So right here we notice there's a downward trend. Let's look at the price over here. Remember I said normally the zigzag price is the zigzag line is the price line. So right here it's blue. Notice it is zigzagged. So basically what happened right here is that the MACD is below the signal line. So over here basically we observe a general decrease, a lower trend in the market. When the MACD goes above the signal line, remember these two graphs are calculated in a sense using the close price. So when the MACD goes above the signal line, you notice there's an upward trend. Once the distance increases, you find that the trend just continues and gets stronger. But when the distance narrows, the trend becomes softer. So right here, the trend becomes softer until the MACD is below. And then the stock price falls for a second, but then the MACD rises above right here, but it rises above briefly. So that's why I say sometimes you want to sit back and observe when the MACD fully crosses over. So right here, this is a perfect example. The MACD, the distance between the MACD and the signal line is great. And in fact, it gets greater. So what we have is a stronger decrease in the company's stock price. So these are tools and resources that I find to be efficient. So yeah, Excel plays a key role. So now this right here is a template. As a day trader, you want to track your trades. This is a template that I derived in Excel. I built it from scratch. I mean, I'm sure you have more efficient templates that can be downloaded online, but this is the one that I use. So basically, I track my trades right here. So this is this has been adjusted. So I've Jane Doe. So you know it's just a template. I'm not that rich, guys. I bought, for example, Mailpack was purchased on the 13th of October. I have my stock transactions right here. I have my cash transactions right here. And then this basically is formula driven to give cash available after factoring in your cash transactions. So your cash transaction will probably reflect like, you know, deposits, and your stock transaction shows you're buying and you're selling. And it's linked up here. I won't go into in depth. I don't want to, you know, bore you guys. Excel can be boring at times, but yeah, that's what happens. I calculate the fees right here. So let's say some brokers offer 0.75% fee. So that's what I use to calculate my commission. As you can see, it's formula driven. So is the CES. So is the JCST. So is the GCT. And thereabout. And all of that allows me to find out what my net cash position is. So right here now, I normally have, let's hide these cells so it's easier to follow. These cells, the cells that are normally highlighted in yellow shows realized gains. And then I have the units, the industry, the asset class, whether it's a stock or a bond, the purchase cost, which is normally the weighted average, the market price, the purchase value, the market value, the percentage of your portfolio, things like that. This is how I use Excel to ensure that I'm adhering to proper strategies, you know, averaging down, diversification, things like that. So normally I keep these hidden. Yeah, so if I want to day trade, let's say I bought, you know, separate at $60.23. I want to day trade. I see somebody is looking to sell separate at $62. What is the gain that I would realize? That's a 2.9% gain. Remember, I said like the fees normally average around 3% after you bought and sold. This basically tells me that $62 is not a favorable price that I would want to sell my share at, because after you've taken out the fees, I would have wasted my time. There are no gains to be realized. So that's how Excel can be efficient in properly managing your portfolio. So I have the graph that shows the exposure to the respective industry and thereabout. Lastly, guys, let's look at the JTrader platform. So I have snapshots from JTrader. So this is your main page, your accounts tab. So this tab right here is basically your account details. It shows you the stocks owned. You can, when you click that tab, this is just a screenshot, so it's not, I can't press. It shows your stocks owned. It shows your statements, your fund requests. Let's look at the main page before I start to speak about this briefly. So this is your JTrader main page. It shows your available cash balances, your JMD, your USD. It shows the status of the account. The account has been approved. This shows active orders that are queued and waiting to be filled. So it shows the date of the order. You can click right here. You see the details. This is just for those who are not familiar with the JTrader platform, but I figure most of us are. This is how you engage in online trading. Your funds in request, right? Basically, you go right here to request funds from a broker. So once you've transferred money to your broker, so let's say, for example, GK Capital as your broker, you do a bank transfer to us of $100,000. We've confirmed receipt of the funds. You want that fund to be accessible to you so you can trade. What you would do, you would click funds in, you select your account, you put the amount that you want, 100,000, you send it. Once the broker reviews the application or the request, it's approved. You will see 100,000 being reflected right here, and then you can proceed to start trading. So basically now, to start trading, you look at your markets. You click on the View Markets tab. So a screenshot of the View Markets tab, I brought that to us earlier. This is basically a View Markets tab. So let's say you are interested in purchasing Berger. You click on Berger right here. What would happen is that you see access to the queue that I showed you. So we can see that this is Carriers. Carriers is a much more liquid stock than Dolphin Cove or a General Accident. As we looked at earlier, there's a lot more demand. There's a lot more buyers. As a matter of fact, there are more buyers than sellers. So this shows that demand is basically exceeding supply. Because right here, if you were to add all of the units, all the buyers in aggregate want to purchase, you can instantly see that it's more than the units someone wants to sell, because right here, someone wants to buy 1 million units of Curls at 639. The largest block that we see right here in the smaller queue is 379. So you don't even have to do the maths. You can see that you know, this queue is much more vibrant, much more liquid. And basically, the JTrader platform as well, in addition, just like how the stock exchange shows us, it shows the trend over the respective periods, and then we go right here, we click buy, and you know, you basically enter the price that you'd want to buy, the number of units that you want to buy in accordance with the money that you have to spend, and basically that's how you trade. Lastly, I mentioned, as I said, you want to stay abreast with market news. So Yahoo Finance. What is Yahoo Finance telling us? Stock futures flat as investors eye election results. This is basically for the US market. As I said, it's much more complicated than our market. So basically, you want to go use these features for your tools and resources. I mentioned arbitrage, where you want to factor in the exchange rates. I keep the Bank of Jamaica website as a bookmark. I'm able to see that the weighted average buy price for USD closed at 146 today. They said, whoa, the rate will go up again. Wow. So we see there the sell rate closed at 148. I think it was 147 yesterday. So this is an example. We see it's trending back to 150. So had we bought a dual listed stock proven our TransJam while the rate was at 141, we had the US sitting on our account, we would be benefiting from the increase in the exchange rate because the rate is moving from 141 to 148. So that's how you would benefit. Lastly, your Jamaica Gleaner website. I always try to stay abreast with business news. So you click the business tab right here. I can see what's happening in the micro lending industry. I can see government plans for new parliamentary building. I can see Express Catering, who operates, you know, your Starbucks, your Margaritaville. Sorry, they're basically under the same group. I can see that they're optimistic despite $1 million loss. This is how you stay ahead of the news, guys, and this is how these things assist you with day trading. You want to be informed. You want to be the early bird. So in closing, guys, I want you guys to remember 3 tips in addition to all of the strategies that I mentioned earlier. Strategy 1, don't panic. Leave emotions at the door. If you know the true value of your stock price, when you see it falling, don't panic, don't go and sell. This leads me to my second point. Try not to realize losses. This can probably be considered to be relative, but I don't like to realize losses, especially if I know a stock is more than what it's trading at. You will rarely find me selling that stock below what it is worth. Trade stocks only at what they are worth. And then lastly, guys, you reap what you sow. The more time you put in towards investing, the greater returns that you will enjoy. So these are the things that you want to consider when doing both day trading and long-term investing. And that concludes my my 2 cents on trading strategies as well as the tools and resources. I hope you guys found it to be productive, and I anticipate and look forward to all your questions and answers. And I'm looking forward to providing answers.
Wow, Andre. Wow, like we don't have words. We feel like we just went through a whole university course. But we have
I hope I didn't bore you guys or lose some of you guys. I hope you understand that, a lot of things I mentioned, as I said, you feel free to reach out to me wherever possible. I can provide topics, and then you do your research and you just try to, you're investing in yourself. By trading on the stock market, you're investing in yourself. You don't have any exam to sit down and prepare for, so you can do it at your own convenience, and it's only beneficial to you. Investing has made millionaires, billionaires.
So I don't think that you bored anyone. We have a lot of persons who are eager for more. They're saying thank you so much. They really appreciate all that you have shared. So, but we do have a few questions. We took notes of the questions and said we just discuss them with you now. So earlier, Chad had asked, which is more effective when doing relative valuation, market or industry average?
I believe that so sometimes generally the market average gives an overall representation of the entire market, but the industry average tends to give a proper representation, because what you find, some industries probably warrant higher price multiples. So basically you want to use to answer that question, the long and short is basically you probably want to use an industry average. But you have some stocks that probably operate in sectors by themselves. In instances like that, where there's no clear competitor, for example, your Jamaica Highway, it's the only infrastructure type stock listed. Basically, there are not much competitors. There's no other listed highway operator. So in an instant like that, you probably want to compare it against the market average, or you want to engage your dividend discount model or your discounted cash flow model of valuation.
All right.
So that's
Chad, I hope that you're still here, and I hope that answered your question. We got second question was from Troyan. What is the process of opening a U.S. brokerage account? Is that something that you're able to share on now?
All right, so we partner with international, we partner with brokers overseas, and we at GK Cap, we do offer the ability for investors to get exposure to the US market. Basically, it's a standard market, it's a standard account opening process. You fill out an application form. We have our wealth advisors who are more than happy to assist with the process, and you provide supporting documents such as your proof of income, proof of address, minor things that's used for opening like a bank account. And then once you've done all of that, to open an account and trade overseas. We will offer exposure to the London Stock Exchange. And it's not just yeah.
That's good to know. So Troyan, if you want to know more about it, feel free to reach out to Andre. I think we would have shared his IG and what else? Twitter.
Yeah, guys.
Right, we had shared his info for IG and Twitter, so definitely reach out to him if you want to proceed with opening that account. Next question was from Simone. What is the maximum or minimum budget recommended for a startup? And I figure that's an investment startup.
So I mean, investment startup. That question is probably relative. It's probably relative, but I mean, probably as a novice, as a starter, I mean, 10,000 is a safe way to go because you can purchase as little as 1 unit of a stock. So you could probably trade in incremental or minuscule amounts, and as you get used to it, as you look at your track record, you see that you're improving, you're entering and exiting profitable positions, then you increase on that. But it's, it's relative to your disposable income. So if you have 100,000 to your name, you probably don't want to invest $100,000. I mean, how would you do your bills? But, if you basically invest accordingly.
Right. I think you hit the nail on the head. Check your disposable income and don't invest anything that you're not willing to lose, just in case. So, yeah. Next question was from MoneyMax 101. Read dual listed stocks. Would you need to have a USD equity account to sell as USD?
No, you won't. Once you open your equity account and you've gotten your JCSD number, it's basically automatic, because what happens is that you have an account with a broker. I know, at least speaking for GK Capital, your account, you basically have a USD, any currency basically. Once you've traded that stock, that currency is what's in your account. At any point in time you want to convert your funds, let's say you want to convert your USD to GMD, you just have to reach out to your wealth advisor, instruct them, they probably query the rate, they provide the rate, and you confirm the conversion, and then the money goes to your account. All of that is provided in an activity statement or your portfolio holding upon request, or normally dispersed at the end of the month.
All right. That's good to know. We have another one from Troyan. Being that Carreras pays 10% yield, what are we to expect of the growth of the company?
All right, so with dividend yielding stocks, normally when a company pays dividends, especially if they pay it aggressively, that shows that their return on equity is very high. So for example, I think Carrier's return on equity is close to 100%, if not more. So they're generating enough cash to be able to pay out a lot of it in dividends. Also, Carrier's is a relatively, it's a value company, or it's a growth company. The parent company, Carrera, for those who are not familiar with Carrera's, your Craveney, your Matawan, cigarettes, they're in that line of business, the tobacco line of business. So it's an established brand. So when you look at it, they're not a growth stock, they're a value stock. So they, going forward, you would really expect much growth, as you would like, for example, from a milk that's probably poised to grow, probably 20% over the next 5 years. Carriers will probably just grow by 5% or so. So they basically don't really have any need to be keeping all of this cash on hand, because basically businesses grow when you reinvest the funds. Carriers has grown past that. They're at the position where they can pay out earnings and dividends to investors. And what this does is it stimulates an increase in the stock price, because when you're paying out a lot of dividends, it attracts investors to purchase a stock, and that increases demand, which in turn increases the stock price.
Makes sense. All right, so we have a few more questions that came in after. So MoneyMax 101 had another one. And we're talking about, you had mentioned realizing losses, Learn Grow was talking about it as well. If you have an unrealized loss for QWI, for instance, which is down because the markets are down, would it make sense to take the loss and invest otherwise?
So I think that would probably boil down to the type of investor you are. So whether you're an active trader, or a short-term trader, or a long-term trader. If you've done your research on QWI, which basically tracks local listed equities, and you're confident that coronavirus will subside, it will pass, and the markets will eventually improve, But it probably over, you know, a long timeline, probably let's say 5 years going forward. You're a value investor. If you're a long-term investor, you would want to hold until the stock grows, until the markets recover. However, I made mention of arbitrage. If you see your arbitrage opportunity, you don't have much cash, you're in on QWI. What you probably can consider is to close your QWI position, instantly try to benefit from like an immediate position or an immediate opportunity, and then you lower your net loss. But as I mentioned earlier, guys, I'm not really a fan for realizing loss, especially if I know the company is more than what it's trading. So yeah, that's my 2 cents on that.
Absolutely. And I think this is our last question that came in. Can you speak on margin loans? Have you ever taken one, and is it worth it?
So margin loans, you're basically borrowing against the equity portfolio. I think the you know, some brokerages, I don't know, it probably varies, but I think you can borrow probably up to a max of 50% of your investment portfolio. That includes cash. So let's say you have investments totaling $1 million. What your broker is willing to do is to probably offer you a loan of 500,000, which is a half of your portfolio. And you can use this, you can withdraw it, you can use this to further invest in stocks. So this makes sense where you're still like a clear buying opportunity. So let's say, for example, somehow your crystal ball shows that, you know, we mentioned Separate earlier, that a blowout quarter. Your crystal ball showed you beforehand that Separate is going to do well. Because I mean, leading up to Q3 announcements, they have been improving the margins. Profitability has been growing despite the COVID-19 pandemic. So this shows that Separate has been resilient. But let's say you see this beforehand, you want to take a position in Separate. You don't have any money because you have $1 million, but it's all invested in stocks and you don't want to exit those positions. In times like that, it's useful to take a margin loan because you're confident in Separate. You take a margin loan, you invest in it, and that's what a margin loan does. It provides with additional liquidity or additional funds to invest. It's, however, offered at an interest rate. I think they average about, you know, like 10% thereabout per annum. And you know, basically you will get a margin call should your portfolio, you know, fall below that of should your portfolio decline too heavily. So margin loans can be useful, but you however want to be wary of it and you want to do your research about it, you probably would want to speak to your wealth advisor to understand the quirks of it and just ensure that you, again, do your research, guys, do your research on what a margin loan is.
Yes, absolutely. So I think that is it for the questions. So with that, Andre, again, we just want to say thank you so very much. It was a wealth of information, and you have also promised our group some resources. You have so graciously agreed to share some of your resources. So we just want to say to everyone that some of the resources that Andre shared here today, he will make available to us. We will have them uploaded to the Facebook group. So if you haven't done so yet, just jump over to Facebook and join the Learn, Grow, Invest Facebook group to have access to some of the resources that Andre has shared here today. We want to thank you as well, our participants. Thank you for engaging. Thank you for being here and just participating in this time. Andre, I see you're getting requests for attendance at another YouTube channel. So, you know, that is what our community is about, sharing our knowledge, sharing our resources, and just having a space where we can all grow together. So again, thank you, Andre, and for everyone who is here, remember to like, share, subscribe, comment. Let's grow this community. Help us to help others build a smarter investment community in Jamaica. So thank you all, and I think that's it for us today. So just have a blessed evening. We will see you guys next month for our next meeting. Look out on Facebook, Instagram, Twitter, and YouTube for the next meetings. We will see you then.
Thanks for having me, guys. Stay safe.